Well, hi, Jason. I'm excited to have this conversation with you today. I know our community is excited to get an update, and um, and I'm excited to connect with the community myself. So let's get started.
Yeah, I'm excited too. It's about time that you and I got together. And for those who are watching in the audience, you don't know it, but you're in the presence of greatness. This woman was a master business to business marketing, uh, award-winning marketing expert. You should, you should introduce yourself to the community. I don't want to steal any of your thunder. They're sick of hearing from me. They should hear from you.
Well, I'm excited to be part of the Auditchain community, and I'll share a little bit about my background. You know, I've been a digital marketer now for, about 20 years. Kind of grew up with the internet, and transitioned from traditional marketing into what was at the time the World Wide Web, and so really seeing the evolution of digital transformation. Worked at Microsoft, worked at eBay in the early days, and have seen sort of the evolution of the internet and the technology as it's evolved. Worked at some mobile web companies during the ringtone days, e-commerce, early e-commerce, and there's a lot of parallels to what I see happening in the blockchain space. I remember in the early days being at eBay and having to drive adoption, not only of sellers using the e-commerce platform. Will people sell online? Those were the questions people were asking. Will people buy online? Will people use their credit cards online? We had to drive adoption of PayPal, and just seeing how people's behaviors, change, and how businesses drive that change as the technology evolves, which is, one of the reasons why I was really excited when I heard about Auditchain. Was back in 2017, early 2018, and heard the use case, read the white paper, and immediately for me, it was a very instant understanding in terms of why blockchain, in my opinion, is basically perfect for the accounting and auditing profession, because it's all about transparency. And anyway, so at that time, I really was like, I want to be part of supporting this project and invested. And that's how you and I, I was introduced to Jason, heard his vision, and kind of heard how you conceived of, the need for a product like Auditchain, and it made a lot of sense to me. So we've stayed in touch over the years, and I'm excited, to see the project mature and actually, be working in the product and seeing how it's evolved, and seeing how now we're starting to see how the accounting profession is, paying attention and getting interested and evolving. So it's going to be an interesting journey, and I'm glad to be on board.
Well, I'm really excited that you're here. Because one of the things, and the community knows this, is that, we have a propensity to build, because this is a complicated project, right?
Yeah.
And it's blockchain itself is easy compared to combining blockchain with financial reporting and audit is it is a Herculean task. And so our resources were focused on building, right?
Yeah.
And not so much marketing, until we had a product that we had enough input from the accounting, audit, financial reporting, and also investor community that gave us, the green light to say, all right, let's now devote, we're past a certain point. Let's devote resources to marketing. And marketing, as you and I talked about many times, it's the last thing we do is market a token, right? That's a software utility. It grants you access as an actor on the network.
Yeah.
The use case regarding marketing, the customers regarding marketing, the domain that we have to address, the product market fit, all these things have far less, or I should say, are far more important when it comes to the totality of building a network like this one, right? And so, we've, as you can see, have come to a point where, we're ready to go to market.
Yes.
What does go to market mean? It does not mean shilling a token. We were never about shilling a token. We were always about building this network. So
Absolutely. And even in the early days, I think the token obviously is going to be an exciting part of the utility in value in the ecosystem, but it is a core part of the use case. There's a big problem that Auditchain is trying to solve for. In the industry, when you look at the accounting profession, there are some huge problems. Not only just them being a little bit behind on the evolution of their digital transformation, but there are some systemic problems in terms of transparency, scandal after scandal, and we've got a technology that can aid in that can rehabilitate, if you will, the credibility of the profession. And we're starting to have some of those conversations. And I must say, it's exciting to see how well received they are. When we went to the Digital Accountancy Show, you guys had a ton of conversations with folks that are practicing in the profession and are interested and are eager to learn about blockchain technology and are eager to learn about any tools that can help them not only save time, but just improve the accuracy of the work they do. Their work is dependent on that.
Well, so that's one of the things that I actually wanted to talk about. What I noticed right away were the demographics who did pay attention, right? And the ones who paid the most amount of attention were usually under the age of 35.
Yeah.
The ladies paid more attention than the men. They asked more questions than the men did, which I thought was rather interesting. They, I think, have this, innate protective, they're concerned about their profession. Some are very proud of their profession. And, but in the United Kingdom, as everyone knows, it's a mess right now.
Yeah.
Because of these, you're going to have a reconstitution of their regulatory infrastructure, which is to say their audit oversight framework. And the UK was the first to publish written statements that spoke to the heart of what we do as far as how an enterprise engages, because our EVC, we call it, external validation contract, is governable by the community as well, but it involves the retention of a plurality of auditors. that can divide responsibility or come to consensus on the same responsibility,
Right.
right? And so that was really, really encouraging. And that, I mean, that happened 2 weeks, was it a week before the show, right?
Right.
2 weeks before the show, they handed down the fine to KPMG, and then the UK government published this whole blurb about how they're dismantling the FRC and they're replacing with a new regulator. And it's on the government's website, UK government's website, and that was a week before the show. And I had to, as you remember, I had to sort of rejig how I presented this. So, but I have to give plugs because I won't forget them. There were two elderly gentlemen that came to the booth, and you couldn't move them any more than you can move the Queen's Guard. I literally I felt like Mr. Bean. You couldn't move them. It was they're set in their ways, and they're professional skeptics, and
well, the train is going to has left the station, and they're going to get left behind.
I was going to say, their way of life is their way of life, and we believe, and it's evident that a new way of life for audit and accounting and financial reporting is on its way. I do want to talk about, and I want to address some of these questions that everybody asked, but before we do, I want to, for a minute, just talk about current events, right?
Yeah.
I have felt, to be quite brutally honest, I have felt like the boy who cried wolf for 5 years. Nobody understood it. Nobody cared because they were busy, right?
Right.
Everybody was busy making a lot of money, to such an extent that the mentality of some of these people is such that they feel that they're entitled to 100x in 100 minutes. And that's not the way the world works.
Right.
When I went to school, we had to, we planted our seeds and we waited. We were patient, right? That's not to say that the business cycle has not sped up. It has substantially. But companies are even going public at a much, much later stage. But these token projects were flinging tokens out the door, took them a half an hour to code up. They would raise the money, and now they got to figure out, well, we made promises to people to build a network. We owe them a network. And one of the things I want to say is this actually has very substantial accounting implications. Because if you raise X amount of dollars and you sell a token, which has to be used to access a network, but you haven't built the network yet, you have revenue that you've received.
Right.
But you also have a liability because you owe those people a network. And to the extent that you have not yet delivered it is the extent that you must keep recorded a contingent liability. When you deliver the network, you then you make the adjustments in your accounting to reflect the fact that you've made delivery, right?
Right.
It's the same. It's more complicated, but if you pay me in advance for a product and I don't deliver the product to you,
it's the same.
That's an accounting issue, right? Absolutely. You have a liability. That's a liability on your balance sheet, right? So you've got tons of these projects that have done that. And we've seen that since 2017, as you know. What we have as an issue in current events is, when you look at Celsius and BlockFi and
Luna,
Terra Luna and 3 Arrows Capital, I mean, I see Bear Stearns, Lehman Brothers, long-term capital management. I mean, it's like as if it were 5 minutes ago. And what Bitcoin was supposed to do, and it did, don't get me wrong, it did that successfully. It's the only one that did that successfully. Is it was supposed to address the issue of removing the intermediary, right? Yet, what happened? These companies used blockchain to build an unregulated array of interconnected financial institutions who are not regulated as financial institutions, provide no financial disclosure, have no coverage under FDIC or any other extraterritorial depositor insurance scheme originated by any government. And I'm not saying I'm pro-government or one way or the other. I'm just pointing out that 2008 happened almost precisely. And I can see it now. I'll never forget it. Ace Greenberg, God rest his soul, was the chairman of Bear Stearns. He gets on CNBC and he was asked, do you have a capital problem? And his answer is a flat out one-word sentence, no. And the truth was he did not have a capital problem at the time he was asked that question. But once the market started declining, their inventory, which was 50-to-1 leveraged, substantially deteriorated. And because they were so leveraged, they didn't have a capital problem the day before. And the day after, they had a capital problem, right?
Yeah.
So this whole issue of Celsius is really a poster child for what I have been screaming and yelling about for 5 years without anybody listening to me. And that is financial disclosure with cryptographic provenance all the way back to the transaction itself is an indispensable part of any decision that needs to be made to either loan, make a loan, buy something where you are expecting a return. Everyone is expecting a return. They're all dependent upon a small group of people, a common enterprise. There's no way around that in the United States, right? Because we have the Securities Acts, right?
Right.
33 Act, which is your coming out party, and the 34 Act, which is your staying out party, your continuous ongoing disclosure, right? And this is, I want to say that those two Securities Acts, they're almost 90 years old. They are by far two of the most ingenious pieces of legislation ever to enter the books of the Federal Register, ever. Two of the most ingenious pieces of legislation, right? And I know I'm going to catch flack for this because a lot of people are against the SEC right now, but I mean.
So what is the level of regulation that you think, we have? You're right. You've been crying wolf for a long time. What do you think should happen going forward? And how do we connect the dots to what we're doing here at Auditchain?
So unlike Gary Gensler, I'm going to provide definite and specific remedies, right?
Yeah.
Because all the SEC does is they rely on an age-old legacy framework, and they say hire an attorney. Now that's another thing. The problem is these kids hired attorneys, right? And when they hired attorneys, and you walk into an attorney's office with a runway of 40 million, the attorney immediately looks at an opportunity as to how much of that $40 million,
the wrong way.
how much of that 40 million can we get?
Yeah.
Right. So let's not go straight to the 33 Act and prescribe a method of making your initial disclosure for them and possibly either filing it on a registration statement or seeking an exemption from registration. We shouldn't do that. No, we can probably get between 1 and 3 million before we even go in that direction. So let's do that, right? So they come up with all sorts of memorandums as to why it's not a security. They won't write a legal opinion, but they'll write a supporting memorandum of law, which is the same thing that you submit in connection with filing a motion for summary judgment in any case, right? Or a motion for this or that, you have to draft a memorandum of law. It's a supporting theory with a bunch of cases that supports your argument, right? And the other side is going to oppose, and they're going to come up with their own memorandum of law with different cases, right? So, but the point is that the lawyers see this as a money grab the same way everybody else did. The difference is the lawyers know better. These kids did, right? So, and I'm not saying certain groups were kids. They weren't. Some of these people were seasoned. Some of them were maybe whistling past the graveyard for as long as they could, and hoping that nothing bad would happen. But when you have something like a Terra Luna kick off a cascading effect, which frankly, and that's another thing I want to talk about, is this business of selling when it's too late, right?
Yeah.
If you don't need the money, then the only explanation for people's behavior when they sell is that of a suicide jumper. It has nothing to do with preventing more losses. They just want the pain to stop as soon as possible. That's all they want. It's nothing about numbers. There's no mathematics. There's no rhyme, reason, or logic, right? And I've experienced it. Right?
I mean, that's kind of what inspired you to develop Auditchain was your interactions with the system. So how do you think Auditchain, what's the role that Auditchain can play in the current environment?
So if you're a group of people, and it's always a group of people at first, right? They may not be associated with a specific entity, but it is a group of people, right? If a group of people gets together, comes up with an idea, they don't have the money to build it and they've got to raise the money. Well, I am sorry to say, forget about regulations. You've got a moral responsibility to tell the people who you're asking to make a capital contribution what the dangers are. Right? We're a group of people. Some of us worked together in the past. Here's a detailed description of who we are as people. This is our business. Here's the market we're addressing. Here's the size of the market. But it's risky, right?
I mean, folks at Celsius would say they did that, for example.
I don't know. I haven't dug that. The only thing I look at is a bankruptcy filing, and that's going to come out, right? If you want to recap, a really official litigated recap of what happened in that regard, watch the docket, right? That's public information. Go get a Pacer account, Southern District of New York, right? Bankruptcy. So if you have a Pacer account, you can see the docket, every document that's filed. What you can't see necessarily is testimony in court, right? So when they call somebody to testify, although that's recorded through the use of a stenographer who types hieroglyphics, right? I never understood that stuff. But that's not the stuff. What you see is motions filed, supporting memorandums of law, oppositions to motions. Actually, you don't even see discovery demands. You'll see a lot of things that'll give you clues. But the point is that, look, nobody provided financial disclosure. And the investors, forget about regulation. I have always taken the position that we are going to sell this to investors and educate investors. They are entitled to an account of what happened financially with a narrative and footnotes that explain this stuff, right?
And blockchain is the best ledger for that.
Yeah, but there's no context, right? You need to know the addresses. And then what happens when value moves from one address to 15 other addresses? What does that mean? Who are those 15 other addresses? You don't know that, right? So you have to ask the project, and if they'll tell you, they'll tell you. But when you take accounting logic and reporting logic, right, and you cumulate roll forwards of expenses, right, with a roll up at the end of the period of what is left over, balance, right, an instant, the accountants call it. A balance sheet is the end state as of a specific time, period in time. The P&L statement, the cash flow statements, and the statement of changes in stockholders' equity are articulations of changes in state, right? So at a bare minimum, yes, financial disclosure is a fair way to inform people, right? Not everybody's going to read it, but you got to provide it. You got to provide it.
So connect the dots for the community with, you know, where would Auditchain play a role?
Well, nobody's pitching them financial reporting. Nobody's pitching them. Their lawyers are not telling them file finance. Forget about filing. Disclose it on the website somewhere, right? What is articulate your financial state to your community?
Yeah.
Provide a balance sheet and show them your end state, right?
Yeah.
You're a blockchain, so everything is exposed until you convert crypto into fiat. Then that's not exposed. That stuff's hidden behind the firewalls of bank custody environments, as everybody knows, right?
Yeah.
So, which means that your accounting information architecture also conceals that stuff behind its firewalls, right? But if you take a company like MicroStrategy, MicroStrategy is a traditional legacy enterprise governed by a legacy regulatory framework hidden behind the firewalls of that framework, yet 90% of its assets are open ledger based. So if you knew the addresses that contained all of the Bitcoin that MicroStrategy owns, then you can see whether or not they executed dispositive activity, meaning they sold some and then they bought again, or they sold higher, bought lower, right?
Yeah.
Because right now we don't know. Now, Saylor's adamant about using the 8K rule, right? The 8K is an interim disclosure. You got 3 days to disclose material events. So when they buy Bitcoin, they file it on Form 8K that they purchased X amount of Bitcoin at an average price of Y, right? What we don't know is whether or not they actually sold some or hedged it or somehow performed dispositive activity, right?
Yeah.
So although people who purchase digital assets, I call them open ledger-based investors. We live in an open ledger-based society, or we are moving into the life of an open ledger-based investment society. The bulk of the money in the world is not yet in digital assets, so the world doesn't live in an open ledger-based society yet. But when you deal with digital assets, then you're dealing with people who believe in an open ledger-based society. Therefore, you should be acting as such and provide a contextualized open ledger, not just, you know, a block explorer where there's addresses and you got to figure out why they moved value from one place to another, right?
Yeah.
So on the one hand, the legacy system has a prescription that's definite and specific on how to articulate changes in financial state pursuant to US GAAP or IFRS or UK GAAP, Swiss GAAP, whatever financial reporting scheme you're submitting to, right?
Yeah.
Which is all dependent upon where you're based, right? If you're based in the United States, you're reporting under US GAAP. If you're based in Europe or Asia or somewhere else, you're reporting under the International Financial Reporting Standards. They all have their frameworks, right? The accounting rules and standards themselves are not perfect, such as, case in point, the way you must treat digital assets. That is another problem that regulators have. So let's just say for a minute, if Celsius were a public company and they filed financial statements, right? And they booked custody of digital assets as of June 30th, 2022 of 4 billion, right? Well, what happens when those digital assets go to 2 billion? Well, that's a challenge, because if you mark them to 2 billion, what you're actually doing is you're impairing intangible assets, because that's how they're treated.
Right.
Anything that's immediately convertible into cash should probably not be classified as an intangible asset, except an NFT maybe. That, I think, is fair to classify as an intangible asset, because it's unique. There's only one of them.
Yeah.
And there's no established market for the one and only unique thing, right?
Yeah.
But when you're dealing with Bitcoin, which is a fungible asset, I don't think it's fair that it should be treated as an intangible asset. But my point in this whole thing is, if Celsius were a public company, they'd have a challenge telling the truth, right? And that's not to defend them. I'm not defending them or what they did. But the point is, MicroStrategy has the same issue, right? Will they revalue and impair their intangible assets? I don't know. Nobody knows, right? And if they do, you cannot revalue it until you sell it.
Yeah.
Right? When you sell it, you're then
Market
recording
tells you
the
what it's
difference.
valued at. Yeah.
You're recording the difference between its value after impairment and the price by which you sold it, right? Now, if you're going to impair it, usually if you have profits, you're taking the aggregate of the impairment and you're hitting your earnings with it. So if you earned $1 billion, you got $500 million in impairments, your net earnings will be $500 million for tax purposes. And that's another problem, because in the United States, tax reporting and financial reporting are divorced. In Europe and elsewhere, they're married. Right?
Yeah,
So
that probably leaves a lot for
it's
human
not
error
only
and
the accounting industry that has challenges ahead of it with digital assets and even the legacy system, but it's the way that that industry is regulated and needs to move into the future.
So, you know, we've got scandals on the blockchain side of things. We've got scandals on what you'd call sort of the traditional side of things. Where are we where's Auditchain focusing? Well, maybe we can talk a little bit about the last few weeks. I know the community, one of the first questions they had is, you know, we went to the Digital Accountancy Show, we launched, and maybe we can give an update on how the last few weeks have been.
So that
your
is,
impressions.
Yeah, that's a mining effort. I always ask myself, how, you know, blockchain was made for accountants. How come they're the last ones to adopt it? And the reason, part of the reason why, is because they're very set in their ways. They're very slow moving. They're very conservative. Crypto goes really fast, as you know.
Yeah.
The accounting profession goes really slow. They're two diametrically opposed cultures, right? And I wrote about this for the Minnesota State Society of CPAs in an article a couple of years ago. But that's one of the reasons. So dealing with the post-digital accountancy show interest is a mining effort, right? It's not one phone call, yeah, and great. It's many phone calls. It's demonstration after demonstration. It's explaining to them that from a topology standpoint, we're not asking them to do anything that's that much different. What we do is we automate certain tasks that they have usually manually performed, but we're certainly not revolutionizing or eliminating the need for an accountant. They all have logic in their minds. And that logic, we are mechanizing, right? We're mechanizing that logic. So we need accountants, as many as possible, to provide logic, because there's always going to be, and they all have these Excel spreadsheets that are, some of them are 20 years old, and they have these formulas that they think are proprietary. And maybe they are, maybe one of them or two of them or a few of them are unique, and it automates their work and it allows them to do testing on certain things, or it verifies certain management's assertions, as they're called, which are calculations delivered by management along with the results. And they have these Excel spreadsheets that verify this stuff. So, and they all think that it's unique. But if and they want to get paid by the hour in order for you to hire them, and they'll use that 20-year-old expertise in order to do this. But the fact is, where they're going to need to learn is how to let go of what they think is proprietary to them, let other people use it, and then earn royalties and trade off hourly fees for royalties when they're used on our network. We've talked so much about process control NFTs, but
so
anyway.
Maybe you can characterize some of the conversations that we've been having, the types of companies, without naming names, post the show, we've spoken to one of the biggest associations that accountants are members of in Europe, right? For example, the community would be excited to hear that.
There's that, right? And that's as a result of the show.
Yeah.
There is a large accounting firm, is all I'm going to say. Also reached out after the show, and there's dozens and dozens of smaller accounting. I mean, these are actually big. I think one of them is 6,000 accountants. And then there's dozens with anywheres between 100 and 500, right? That we're talking to. And again, this is not, they're not buying a dozen pens. They're not ordering 100 cell phones from Apple. They're contemplating
transforming their
altering the way they do things, right? A transformation, correct.
So it's definitely going to be a process.
Yeah.
And one of the things I can speak to is we are establishing a partnership with Accounting Web in the UK, which is one of those, one of the destinations that a lot of accountants go to for education, resources, understand what's happening in the business from a technological standpoint. And we will be publishing content on a regular basis. We've been having great conversations with that organization. So it'll be part of our efforts, part of our go-to-market strategy to introduce Auditchain to that market, to that ecosystem, and educate them not only on blockchain and on crypto, but really be part of looking at the problems that they're having in their space and how Auditchain can help solve real business problems, and deliver business value. And so I'm excited to plug into that community, but that's one of the things that we can, speak openly about, which is really cool. So what that means is, the way I will be measuring, success is, are we driving more brand equity in that space? Are we educating, being part of educating that ecosystem, and are we doing so successfully? Are we driving adoption in terms of getting folks to become Pacioli Node operators? And are we getting more and more people saying, hey, I want to learn more about how Auditchain can help, drive transparency, trust, credibility in their profession, and practically also just help them with their day-to-day workflows. You know, we can very practically reduce the time it takes to validate reports. We can very practically drive accuracy of those reports in a way that other technologies can't. So I'm excited to have those conversations. Is there any other update in terms of the, you know, who we're talking to post-show that you want to share?
As far as the who, I can't say who, but you know, it dozens of accounting firms, a bunch of individual accountants who are crypto centric. There is a regulator we're talking to. A lot's come out of that show. And again, I just want to be clear, it's a mining process, right?
Yeah.
That event, and if we do it again next year, which they've already announced, it'll never end, right? And that's just United Kingdom.
Yeah.
That's confined pretty much to the United Kingdom.
Can
right?
you talk a little bit about why we've focused on the UK in particular? I know there's some
Because it's a mess.
Yeah.
Because it is a mess. So in early 18, when we were, after we started and we began this project, I'll never forget it. It was the bankruptcy heard around the world, the failure heard around the world, right? To me, it was when Carillion, which is the largest, they were the largest government contractor in the United Kingdom, had failed. And KPMG was their auditor. And very soon after that, I'm talking a matter of months, one of their older chain of pastry shops, Patisserie Valerie, failed, right? Also an accounting scandal. So you got Carillion, which was an accounting scandal, and Patisserie Valerie, which was an accounting scandal. And I remember saying to myself, these MPs are burning witches in front of Parliament, right?
Yeah.
Because they became the most vocal jurisdiction about audit reform. The term audit reform existed before, but I think the United Kingdom standardized it, right?
So what's coming down the pipe that puts Auditchain sort of at an advantage?
I'm sorry?
So what has the UK government done in terms of regulation that puts Auditchain at an advantage?
Well, up to that point, nothing. But the FRC, which will soon be no more, ordered the separation of assurance and consulting and advisory, which I believe is the deadline for that separation is 2024, I think it is. Anyway, you had asked a question. The question
like
was,
why do we care?
Why the UK?
Yeah.
Why did we go to the UK? Because they were the biggest proponents for change. That's the reason why. And again, I didn't plan it. It just so happens that the 2 weeks prior to the show, I mean, we've seen the press. I mean, it was probably obscured by the Queen's Jubilee celebration.
Yeah.
Maybe on purpose, I don't know. But you had the fine that was finally handed down to KPMG for their role in forging documents that they submitted as work papers to the FRC.
Yeah.
Right. And then the announcement by the UK government that they're going to be replacing the FRC with a regulator with broader enforcement powers and financed by a levy on the audit profession, right? So the dialogue in the UK government's announcement, which is on their website, specifically talks about, and I'm paraphrasing, a division of responsibilities and a plurality of auditors, which is what, which is what
Yeah,
we've been, that's our architecture, right?
yeah,
And it's been
yeah.
that way for 5 years. So anyway,
Maybe
that was,
maybe you can talk about a little bit about that for those who might not know, like why is that model of a plurality of auditors like relevant to the way we've thought about audit chain?
well, if you think about it, there are 4 auditors that audit 96% of the world's business and financial information.
Yeah,
4, right?
crazy.
And the other few percentage points are made up of smaller firms. You've got BDO and RSM McGladrey and they're gonna kill me. BDO, RSM, and Grant Thornton as the other 3 that kind of make up all but 1%
Right.
of the rest of the business. So you have a need for blockchain style external validation.
Yeah.
And I think by now everyone knows what that means, right? It's an army
Yes.
of validators
Yes.
that are validating.
Which ties
thing.
very well with that notion of the plurality.
And our external validation contract is a digital audit engagement agreement, a smart contract that engages a minimum number of validators in a cohort that validates changes in financial state of an economic entity, right? And it's also set through governance. So if the community decides either on its own or in response to a law somewhere that there should be a minimum of 7 validators to a EVC, each EVC engagement, then the community will get together, they'll vote, and that change will automatically be invoked, right? So now you must, as a reporting entity, engage a minimum of 7 validators to your cohort, right? So, and it's been that way for the longest time. This whole plurality thing with the UK is that language is, they've talked about it before, but never as ominous and foretelling as the way they talked about it in that release. So
if it gets mandated, I wonder.
And by the way, anyone can find that UK government release by Googling the following words, right? UK government audit overhaul, and it should be number 1.
Excellent. And do you know any technology that could enable companies, should this be mandated, enable companies to actually do this? Do you know any technology that does that?
Nobody's doing what we're doing. No, I don't. Nobody, the ducks and the apes and the geese all have their own protocols. Finance has its own protocol. The banana peels have their own protocol. The only one who did not have their own protocol is the accounting, audit, and financial reporting profession until, now.
Well, folks, if you're listening and you're in the accounting profession, get in touch with us. We'll help you. One of the questions the community has is, will there be an updated roadmap?
So the answer is yes. Okay. So roadmaps are mountain roads in the snow. Like if any of you have ever traveled the Newfoundland Pass in Switzerland, okay? You think you're going north from Lugano, you know you're going north. Eventually, you're going to get to Zurich, right? But you don't know whether or not there's blockage on some of those passes. That's a roadmap. And any company or project that's honest will tell you the same thing, right? Right. So the answer is yes. And we've had a lot of curves in our road.
What are some of the things that we have, like maybe you could just speak to one or two things that are on the roadmap that folks can look forward to?
So I'll correlate it to, I think, another question that was asked. In what time period does Auditchain think it is fully operational for companies, people to use?
Yeah.
So you can use our product right now. And we have, and we unveiled it at the Digital Accountancy Show, a suite of products, which are comprised of three main components. One is an articulator, I call it. It's a report creation tool, right? A report model creation tool, a taxonomy creation tool. If you're a reporting entity, you need a taxonomy, right? You also need a report model. Once you have the taxonomy, your report model, you can then build and compose your report, right? We have two components like that. One is under a standard model. The other is under the data point model, DPM, which can be used by governments, because under the DPM model, when the government or regulator builds a taxonomy that they prescribe for, say, small to medium-sized enterprises, the user of that taxonomy cannot change it. You have to use what is prescribed. However, and that's like parts of Europe and other jurisdictions. In the United States, there is no DPM model. The user can extend the taxonomy and alter your report model, right? And there are pros and cons of both. So we have those two products, one for users to compose financial reports, and then one for governments to create report models and write taxonomies, right? The US GAAP is a taxonomy for those that don't know who are listening. The IFRS has a taxonomy, right? And those taxonomies are made using a global standard language called XBRL, right? That's how 51 jurisdictions mandate how you should tag and file your financial statements. And then Pacioli can be used on its own as a standalone piece of software. So what happens is, once you compose your financial statements, you can do internal testing to determine whether those financial statements are a perfectly working logical system across 9 categories of controls, which is everything from syntax validation, model structure, type and subtype validation rules, which make sure that each of your terms are properly associated and the associations are associated properly with other associations as part of the logical framework of a reporting model and a reporting scheme, right? Then you've got fundamental accounting concept, consistency validation, right? Did I apply the concept correctly to the amortization of costs of leasehold improvements over a specified period of time? So we've got that suite of software that can be used right now, okay? Can it be used right now in a decentralized manner? The answer is no. They're two separate things. Decentralization is, as far as blockchain is concerned, there are aspects that are decentralized, right? Like right now, we're testing the Pacioli node, which can be used as a piece of software, a standalone piece of software, in order to validate a financial report and audit a financial report. And we're testing Pacioli on a network so that it can be used on the open network as well as by members of the external validation contract engagement agreement, right?
Right.
So the Auditchain Suite can be used right now. And we can and are going to get customers and are in the process of getting customers with that suite, right?
And maybe that's a segue to, we did get a question about, our go-to-market strategy and how are we going to make sure that Auditchain is more broadly known. And there are a number of things that you're going to see us doing over the next few quarters. But the first one that we have to do is, this, as you've seen in this conversation, we've been toggling between talking about the blockchain community and then talking about the traditional sort of accounting and auditing community. Our website, for example, needs to speak to both those audiences. And so one of the first things you're going to see us working on is just framing a path for each a person in this ecosystem. If you're a developer in the blockchain space and you understand it technically, there's a path that will take you down and when you come to our website. And that's been the space we've been more traditionally speaking to. But if you're an accountant who is not in the blockchain community and needs to be educated on how Auditchain can help you in your business, we want the website to be able to inform you. Same thing for auditors, same thing for regulators, et cetera. So we have to, one of the first things we've got to do is sort of revamp our front door and expand it to include a broader set of folks in the ecosystem who may not be as educated as some of the early adopters and folks who have been supporting us in the long term. So part of the go-to-market strategy is to make sure that all of our customer-facing, prospect-facing assets address and speak to different parts of the ecosystem. And then, obviously, you guys are very concerned with communication and the cadence of communication, the frequency of communication. We are a very small team and we've got to be very, we absolutely hear you. And that's kind of why we're doing this Q&A, and we'll make sure that we're doing something like this on a regular cadence. It will likely be monthly with a monthly newsletter that kind of gives you an update on what's happened over the course of the month, what you can look forward to, and hopefully also exciting announcements when we have them. So we will try to establish a regular cadence of communication, but just understand, as Jason mentioned earlier, it's a process. For example, the event, it's a mining process. Now we have conversations and continue those conversations with people we met. We've determined that we absolutely need to engage with the accounting community. And, I mentioned Accounting Web, they're the #1 in Europe. And that's why you're gonna see us putting some investment and time and resources into that community. More broadly, what I would say about our go-to-market strategy is we have to drive awareness, and then we also have to start driving some acquisition in terms of proving that we've got a product that's, can achieve product market fit, that we've got a formula for reaching prospects, and that we can actually drive revenue. So it's an exciting time to be at this point in the evolution of the company, and you're going to see us, do some tactics that can help us learn and understand what works in reaching, this audience, and then, double down with our finances and resources. But there's going to be a bunch of things that are going to be test and learn, and we will need the community to help us. So in terms of social media, you'll see us get more active in the crypto community, and we need you guys to help us with that. I want to make sure that you guys have assets that are exciting from a graphic standpoint, whether it's memes and assets that are shareable, video content like this one. So we'll be doing more of that stuff. Hopefully that'll answer some of the questions around our go-to-market strategy. We do have a question. What are the current numbers for the Auditchain token? MCAP explained.
Yeah, so if you look on Polygon and Ethereum Explorers, everybody has to remember that we have a token contract on Ethereum. That's the parent. The child is on Polygon. So there are what looks like approximately 10 million tokens in circulation when you combine them both, right? But you have to make some deductions. And there's actually an API that we're working on with our market makers to verify the actual circulation. So you have to, there's 10 million, approximately 10 million when you add the two up. You have to deduct 5 million relating to liquidity, the market makers. And then there's another 500,000 that is locked forever. And then there's about 4.5 million that's the true circulation as of now. If you go to the vesting page on our wiki, it explains the number of tokens subject to vesting over a 1-year period of time. The team tokens began their vesting cliff on June 3rd. That's also up there. There's about 17.5 million team tokens subject to vesting beginning June 3rd. So, and the vesting is structured in such a way where it's released equally every day for a period of a year. So theoretically, you can claim every day, but you got to pay gas to claim every day, right? For the original early adopters, private sale, there's a bonus. So whatever it is that you don't claim that's left over in the vesting contract on day 366, you get a bonus, and that's described on the vesting page. So if you look at true circulation right now, it's about 4.5 million.
Okay, great. And what are the future plans with crypto exchanges?
We'd like to wait for them to crawl to us. We listed at the height of the bull market, right? I think. No, actually we didn't. The prices didn't come down to November, right? But they cost money. So do we want to spend $1 million listing on Binance? No, we don't. For what?
Yeah.
Right?
And I think the community, you got to ask us, where would you rather spend that $1 million? Continued development of the product, or
well, here's the other thing with respect to exchanges. Some of them list you on their own. Kraken does that. Coinbase does that. Even KuCoin, to an extent, doesn't charge money to list you. They list you based on merit. And our use case, since we've been crying wolf for 5 years, and that wolf has finally showed up, and he's got long teeth, maybe they'll see us differently.
And I think that'll be part of our go-to-market. is, driving awareness of Auditchain with the exchanges, and looking for ways to, create, co-market, etc. So there's some work that we need to do on our end, but to Jason.
Yeah, but I also want to say something that's extremely important that maybe not everybody understands or they don't want to hear.
Yeah.
There's only one thing that drives value. That's utility. Are people using the token?
Yeah.
Right. And our use case is such where if you're a reporting entity, you can't use 2 tokens. You've got to use a substantial amount of tokens, right? You've got a staking system that requires a minimum of 5,000 per validator, right? And you've got a governance system that requires you to use other tokens other than what is currently at stake or in use in the network. So if you want to vote and you're an actor on the network and you've got tokens at stake or pending payment, you've got to go out and buy more tokens in order to vote. So, and we have a small circulation and a tiny, tiny market cap, right? But the long-term value will always be driven by utility.
Yeah.
Everything else is just wasting money on a lot of noise to try and hype the price of a token. And anyone who's complaining that, about the lack of hype is looking to sell.
Yeah, we're trying to build a long-term business, a business that's going to change a whole industry. Speaking of contracts, somebody asks, can you explain what's the plan with the staking contract?
So if you're interested, you can join our Pacioli Node testing group. The staking contract will get rolled into a staking contract that enables you to act as a validator. Now, you don't have to operate a Pacioli node to be a validator, right? One gets a validation reward and then the other gets a staking reward, right? So the staking contract will work in 2 ways. One, if you're a Pacioli node operator, you must stake 5,000 tokens, right? There's no way out of that. If you want to be a validator but not operate a Pacioli node, you can delegate to Pacioli node operators. So what does that actually mean? Well, those validators on the network with the best reputation will likely be the validators that have the highest number of tokens delegated to them, right? People speak with their pockets. They vote with their pockets, right? And that'll be evident on the network. So, and it's the same thing for process control NFT creators, right? The one who creates the best controls and the most amount of controls is going to have the most amount of tokens delegated to it, right? So we have a leaderboard being developed that will show the top validators and the top process control NFT creators.
Yeah.
Right. So that's how the staking contracts will work.
And what are the ways that people can earn audits?
Well, you can earn audit now by participating in a test environment, right? You can act as a delegator if you're not technical and don't want to operate a Pacioli node. You can operate a Pacioli node, and but both of those roles require that you also act as a data subscriber, which is someone who fetches, as of right now, SEC reports that are filed already, copies the link, and submits them for analysis by the network the Pacioli nodes, right, who output an analysis to determine whether or not there are inconsistencies.
Yeah.
Right.
And I want to thank everybody that has signed up. We need a few more of you to help us test the platform. We've got a pretty comprehensive manual that can help you with the setup and a video incoming. So look out for that. That will make it even easier for you to get set up as a Pacioli Node Tester. What are the requirements?
Yeah,
Sorry,
I was just going to say that. I think that answers that question, right? What are the requirements to operate to run a node, right?
Yes.
Can you do it with a PC? Yes. Windows? Yes. You don't need to operate a Pacioli node in a server environment. You don't need ASIC mining machines. You don't need GPUs. That's not the kind of computation output that requires those types of configurations, right? Theoretically, you can run a Pacioli node on a Raspberry Pi, but do it with a PC. You can do it with, if you've got an AWS account or an Azure account, you can create a Debian Unix environment, and it's launched right off of a Docker image, right? So you got to understand Docker, and you've got to understand server environments. But all you need is either a PC or any server environment.
Yeah, and check out our website. We've got the link to the manual and the link to apply to become a node operator. We do have a question here that I partially answered, but I want to make sure we get a chance to kind of address what it's implying. It says, could we get an update or 2 or 3 weekly so that we are kept informed and know that it is a real project and not a scam project? So I think I spoke about sort of the cadence of updates. As I mentioned, we are a small team. So a monthly update, I think, is something that we can absolutely do. In terms of know that it's a real project, not a scam project, I think for those folks who may be new to Auditchain, maybe Jason, you can just speak to some of the folks who are on the team. Everybody, you can take a look at us on LinkedIn, but speak to, we've got the father of XBRL on the team. We've got some, who else do you want to kind of speak to that can address this notion of this is a real project, not a scam project?
Well, Bogdan is on our team, Bogdan Fedor. He's probably been in the Ethereum space since the launch of Ethereum. One of the most influential developers in Canada. We've got Fuad Bejic, who used to, before he started working full-time with us, had a nice cushy job at the Bosnian regulator. He's also a full stack developer, but an expert at building XBRL data sets. We've got Miguel, who is a PhD, who built Pacioli. Jacinto, who is also a PhD. These are computer scientists, logicians, who's also working on Pacioli. And then you've got Chris Jastrzebski, who's used to be a lawyer, and now he's our front-end UX UI lead. So we got a board of advisors that I would consider, 2 of them are part of the original XBRL Mafia, Tom Egan and Tom McKinney, both CPAs, and Christian Dreyer is a CFA. He's on the board of XBRL Switzerland, and he's also founder of the CFA Society of Switzerland. Pretty popular guy in the Swiss fintech space. And Mohan, right? guy I go back with since I was, maybe he was one of my, change my diapers in blockchain when I was a baby in blockchain. Jonathan is a founding contributor to Ethereum, founding contributor to Consensus, a founding contributor to Factum, EOS, ran the longest running, largest blockchain meetup in New York. Who else? As far as the team is concerned, I think that's it.
And how long have you been working on this, Jake?
And you,
how long
right?
have you been working on this not scam project?
I have been depriving myself of the riches in crypto for almost 6 years now. So the selfish part of me hopes that everyone has come down to the level of wealth that I am, which is zero. The other part of me still thinks that had he done something else, been an advisor to a dozen or so other projects, I would have made a lot of money, but almost 6 years now on this project. And if this is your first time ever hearing me, I started this project in response to a war I had over an accounting with a regulator. Yeah. So it's not what I planned for my life.
Well, the fat lady hasn't sung yet, and it is a journey. And I think we were a little bit ahead of our time, but very timely right now. Very timely.
Our time has certainly come, that's for sure.
Let me see if we've got a few more questions. I think we've addressed pretty much all of them. Is there anything else you'd like to say to the community?
Yeah, Sam Bankman-Fried on brink of second bailout for no, I'm only kidding. It reminds me of the inscription in the Genesis block of the Bitcoin blockchain, which if you don't know, there's an inscription in block 0 that refers to an article that was released on the same day called Chancellor on brink of second bailout for banks. It's like I'm dreaming. It's like happened all over again. This was not supposed to happen.
No.
Because of Bitcoin, but it happened.
So how do you
need help? The audit profession needs help.
Absolutely.
That's all. They need help. People think they're really, really smart. I think they're still really, really smart. But they need help.
They need to come along. This is where we're going. This is where the space is going. Leverage the technology. We'll leverage innovation technology to make your job easier, make you more accurate. Like, they are the profession that needs trust the most. You're handling people's livelihood. It's so to the community. We will thank you for listening. If you have stuck through to the end, we will absolutely do this every month. So keep your questions coming in. The way you can bring them in is either hit us up on Twitter, respond in the Telegram, our official Auditchain chat. We're hoping some of you will become Pacioli Node Testers, and there's a separate Telegram group for that. You can also reach out by emailing marketing@auditchain.com, and we're happy to respond that way. So hopefully this has been helpful and useful. We will post this up on YouTube, so you can also post follow-up questions in the comments. And we look forward to speaking to you again. Thanks, Jake.
Thanks, everyone.